I really doubt that we're going to see an inflationary cycle.
Most economic analysts believe that it will have a temporary or transitory impact.
The faster than expected increase in some of those prices is actually a good sign.
The overwhelming consensus is going to pop up a little bit and then go back down. No one's talking about this great,
This is something that will settle down.
Transitory.
Transitory.
And the data shows that most of the price increases we've seen were expected and are expected to be temporary. There's nobody suggesting there's unchecked inflation on the way. It's highly unlikely that it's going to be long-term inflation that's going to get out of hand. I don't know anybody who's worried about inflation.
Over the last couple of months, we actually saw it trended downward.
President Biden's chief of staff, Ron Klain, enthusiastically retweeted an economist who had said in part most of the economic problems we're facing, inflation, supply chains, et cetera, are high-class problems.
What is the Granholm plan to increase oil production in America?
Oh my God, that is hilarious.
Well, the number one thing that the president can do is help get COVID under control. That we know is the root cause of inflation.
President Biden this afternoon saying he thinks we're at the peak of the crisis right now and that lower prices are on the way.
The inflation has everything to do with the supply chain. Make no mistake, inflation is largely the fault of Putin. I'm going to do everything I can to minimize Putin's price hike here at home.
If you want to get rid of inflation, the only way to do it is to undo a lot of the Trump tax cuts.
I think ever since you've come into office, things are really looking up. Gas is up, rent.
What's up, everybody? Welcome to the Friday live stream. Gonna chat for a second while we get people to filter in. As always, welcome and click on the links below. Join the Discord just to have a talk in there, trading and sharing ideas every day. Who could have thought that this was going to happen? I've actually got another thing that I wanted to share in the notes this morning that came across. This is Citadel's Ken Griffin talking about how NFTs and cryptos and everything going down is a positive for the economy in general. Well, basically what we're seeing is massive capital outflows. All that printed money just getting burned off because it was in non-productive stuff, just entirely speculative assets. No, it didn't create jobs. It didn't create wealth. Sorry about not your monkey NFTs not working, but yeah. Anyway, so what we're going to do to start off with is do a little market recap for the week to update where everything went. Been having a little bit of string problems over the last few weeks, but hopefully those are going to get resolved. So, as always, if you're late to join, if you're watching this later, we do this every Friday. So come join me so I don't have to hack the YouTube algorithm. All right. Give me a thumbs up. Am I coming through, Jen? Everything good? All right. Just 1 second to check on something before we jump in. It's a little legal research of mine. Yeah, I'll chat about that for a second. I don't want to go into too much detail, but I bought a condo and I am trying to renovate it. And I am soon going to have to go to the mat with the HOA. Now, anyone that would have bought a condo would have told me that. They would have said, yeah, don't buy a condo. But I really like this place. I really like the location. And so I'm not regretting it at all. It's actually becoming a very interesting challenge to fight some Karens. So one of the things that I'm researching, I'll just bring it up here. I won't try to hide it. I'm basically going to doing a little bit of research on Georgia state law as far as what I am entitled to, as far as like what is the boundaries of a condo, and TLDR, what's inside the walls and the floors is yours to do with what you want, as long as it doesn't impede on anything structural. So that is the key, but that's not what Karens really read it as. Karens read it as, oh, you want to do something and you talk to us about it. Well, I have an opinion and we're going to try to make a demand that you adhere to our authority. What's up, Stone Pilot and Steve SoCal? All right, good. So looks like the connection is going pretty good. Let's check over YouTube, make sure. Okay, so that's looking pretty good over there too. All right. So to start off with, I wanted to share another article that I saw today. I like to start with a little, I think I'll do this more, little fun articles for the week. This one, we'll come back to Ken Griffin. So apparently there is a popular Bitcoin astrologer, and she was paid about $30,000 by Celsius for marketing. Apparently, she has 1.8 million social media followers. And key thing here, Altman, who offers investing predictions based partly on her astrological interpretations, has more than 237,000 Twitter followers. I wonder, hold on. I'm curious. I'm curious. Hold on. All right, so let's see if this is her. Looks like her. What is that face that the Twitch streamers make with their tongue out? I think clearly I'm doing this wrong. If I'm trying to be a social media influencer with trading, I need to be I need to do it with astrology. Out of curiosity, can you look at tweets from Time? I don't like Twitter. I really don't. I got one because you kind of have to. Oh my gosh, she tweets a lot. All right, let's just see. I'm curious to see what she was saying back at the top when I was saying it to my 100 or so people that it was coming up to a top. I mean, we already know that she's going to be bullish, otherwise she wouldn't have hundreds of thousands of followers. But I'm just curious. Oh wait. I saw something from. Looks like she just likes to post about selfies of herself. It helps to be an attractive female. Yeah, okay. That's really helping people with the markets there. My TA sucks. Why don't you go back and look at what I was saying in the fall? I know you're trolling. Okay, keep going. I just want to see, because I remember one time on this other Discord, someone posted something around the summertime, June, right before the big dip in the market, crypto that is. This Twitter talking about how, okay, everything's going to be fine. And I went back and looked at their November post, and they were calling for $800,000 Bitcoin. They got a few thousand followers. And in my mind, I would think that if someone was that wrong, they would lose credibility. Okay, I don't know if she's really offering. Okay, now we're getting into, so January, lunar cycles. Okay, and Mercury in retrograde. Oh man, this is really TA for the masses right here. Market cipher indicator. Well, at least she's using TradingView. Oh, she's on TradingView. Do I want to? Yeah, whatever. Streisand effect in view. Let's see. Let's check her out on TradingView. Marin Altman. The Twitter astrology prediction. Oh, this goes back. Okay, here we go. Looks like her last prediction was in fact in December. So, okay. So this was lunar phase cycles. Yeah, you can actually do that as an indicator. MP moon phase. Let's do that. Let's add moon phases. Maybe my TA is going to improve if I do that. Hold on. Indicators. MP moon phases. Yeah, I think it's a built-in indicator even. Nice. Yes. Okay, so based on the moon phase, the S&P 500 should turn on Friday, October 7th. So this is actually bullish, ladies and gentlemen. This is actually bullish. So we'll see if that pans out. All right. Well, let's start getting into something actually. Okay, get rid of that. Go away. Okay. So what are the markets doing? Let's start off with the SPY. Now, one of the key things that I thought was very interesting this week is, look at that. Ping. Pinged right off the 50% retracement of the COVID low to the all-time high. Now, the NASDAQ already hit this level and had an attempt here back in August to come off of it. And broke it. So that's the NASDAQ. That's tech heavy. That is all the things that have been really, really. But the market as a whole has finally hit this 349 level, which I know I talked about last week. I'll be talking about it all the time. So we have now come down to an actual proper 50% pullback of the stock market as a whole, the S&P 500. Now on the daily, the bottom of yesterday, which was that CPI print, which I'm going to talk a little bit more about as we get into it, that actually ended up being a spike down to that level. And that's exactly where it reversed from. Wow. I think if you go into the S&P 500 futures, it's going to be the same deal. Ping right off that level, even though this news event happened around 8:30. Got a few things marked off here for I want to look at during the live stream. Some of these setups from this week, but broadly speaking, let's see. I wanted to take a look at what basically has been happening over the last few weeks. So this right here, this big dip down. Let's do the 2 hour instead. Okay, this dip down right here was the September CPI print. And that triggered this entire move down. And here is where we have the October CPI print. And so this right now is what I'm going to be looking at as the defining range for what the market's following right now. Now, just to take a look at what it is, here's a little thing I use, the Forex Factory Calendar. I've been using this for over a decade now, but it has all of the news events for the week, and it's very helpful. It's very helpful. So essentially, we got the CPI on Thursday. Now, what this shows in this column right here is the forecast. This is, of course, the last month's is 8.3. The forecast, in other words, how that's calculated is a lot of different sources, like banks and funds and stuff that get polled by the market. I'm not sure who exactly does it, but they come up with a consensus number. Now, people may have different forecasts, but 8.1 is what the market predicts. And what you ended up happening was having an 8.2% instead. Now, why is that a big deal? Well, it's slightly above it. You also had a higher core CPI and a higher CPI month over month. Okay, why is that a big deal? Well, in the battle to trade, we've been talking of our favorite squirrel on the Discord, Amer, has been talking about setting up trading bots. Well, one of the things that trading bots do is they read news. They read news as it comes out. They read that print. And so traders that are managing these trading bots, what they'll do is they'll put in, well, if the number comes out higher than expected, higher than 8.1, sell. And then what they're going to try to do is do that within seconds to beat the rest of the market. And so if we look at each of these bars, this is the 828 bar right here, 828, 829, which is a minute before, it spikes up. And this happens almost every damn time. Now, I look for a spike to then close back below to take an entry, but the highest probability is if you short against, or excuse me, if you go against whatever it may be, the way that the market turns in the minute before, you're going to win going the other way. I don't know why that happens. I think it has something to do with the market order book expanding out, maybe people jumping ahead of it. But most of the time, it's going to reverse and trigger, I guess, all the stops of the people that were going long. And so in that first couple of minutes from 8:30, and of course, if you notice right here, that is it was just straight freaking down the first minute. Those are those algorithms kicking in. Now, is that unique just to the S&P 500? No. For those that watch the crypto markets, The same exact thing happened at that same time, same pattern, everything. You have that 1 minute before spike up. So this is 829 on Bitcoin. The fake out to the top side and then boom, down. You got all these bots out there making this happen. It's not just definitely not humans in the first couple of seconds, but they were programmed in such a way as to go short if the numbers came out bigger inflation than expected. Now, I want to do a side by side here. Give me a second here. Let's do a top down view. Okay, let's do a top down view of the ES and a top down view of Bitcoin, because this is helpful to get a little idea for which tail is wagging which dog, or is the dog wagging the tail? Is the S&P 500 or equities the dog? Is crypto the tail? Let's just take a quick look. All right, let's do this. Let's zoom in here and go to that 2 minutes before on the S&P futures, and then let's do the same thing on Bitcoin. Now, of course, what ended up happening, since we had the benefit of hindsight, is actually, let me get distracted for a second. These are levels that I marked off beforehand, and what's interesting is that on Bitcoin, that spike down, isn't it cool that the spike down came right to, well, it's cool, but it's also obvious in hindsight, but also this is why these levels work. The lows from September are actually where Bitcoin spiked to, the very low back here, this little, what people thought was a double bottom back here in September 19th and September 21st. Ping! Right off of that. Pretty cool. Distraction off. All right. Let's bring it up. What I want to see here by going through these is I want to see who drove who. Okay. So let's do this. 8:30. Get them a little bit closer together. We're not going to get it exact, but let's just try it. TradingView, if you're listening, I would like to be able to do a simultaneous step forward, but okay. Maybe this is too okay, that's too fast. All right, wait. Okay, can't do that. 1 second. Let's try this again. You can probably see what I'm trying to do here. I want them to play at the same time. I've done this before with some video editing, but yeah, we'll see. All right, so what we're trying to figure out here is what led what. All right, speeds turn down and go. Oh, that didn't turn the speed. Okay. We'll do it live. All right, let's go out to an hour and we'll just do it with marking it off. So 30 minutes into it, tell you what, when did things start to turn? Things started turning around 10, right about 9:45. Yeah, right about 9:45 this week. So on Thursday, 9:45 on Thursday. So pretty much you have about the same looking price action. You have the dip down minute by minute. You have a little bit of variability. Crypto kind of comes up there. There's where we're starting to lose a little bit because obviously Bitcoin made a higher high, 851, whereas the high was 902. So you're getting a little bit of variability there. But they both start to kind of turn up a little bit. And then right getting up into 10, things start to really turn up. When was a big move? Now, everything's going to be very close to second because of the bots that are trading. But I remember there's a big giant move that happened somewhere in the 10 o'clock. Okay, well, that's going to be interesting variation. Let's do 10:30. So, little dip. Stock market dips and comes up to the 50% retracement. I want to talk about this setup in here, actually. I'll do that maybe if we get some time later. But there we're back. We've recovered halfway of the drop. Let's see, when did Bitcoin recover halfway of its drop? It took a while. Okay, that it hit it at 11:15. So actually, the stock market was already kind of rising up a little bit, and the stock market hit its 50% at about 11:06, whereas crypto still. So basically, the stock market's making higher highs up until that point, whereas you got a high here, the down, and this high. Yeah, so this one didn't quite reach it. This one didn't quite reach it. So it's not really conclusive. I can't say one way or another, but really it looks like still the equities, the stock market equities are driving the sentiment of crypto. It's all risk markets. But what really seems to drive it, where the money seems to be really flowing where it does, is equities. It's a bigger market. It just really is. So it's a little unscientific little breakdown. That's of my curiosity that I got satisfied. All right. So let's now. So a little recap. S&P 500 has finally hit the 50% retracement. I think you need to be looking for opportunities. There was one this week that I was able to capture off that low. This was First Energy. This was on Thursday when that dip happened. I also put on a SPY credit spread, which worked out pretty well. And we'll see what happens going into next week. There's really not much in the way of news for next week. And so it's going to be just pretty much free trading. Probably going to sit there in range, have some opportunities, but not nearly as exciting a week as we've had this week. The next big news, it looks like it's going to come in. All right. Well, TradingView just crashed. That's annoying. Okay, maybe that was the case. All right. That means TradingView is going to be delayed. That's annoying. Okay. I've been working on some different streaming software, but my attempt today to get this fixed was not successful. So I'm going to try something. Got a support email out to TradingView as well. But if I see that thing crash out of the corner of my eye here, I'm gonna try to get to it. All right, let's do the market before anything else bad happens. So not much has changed on the Bitcoin front. The same box that I drew last week. We are still caught within the consolidation. Yes, we bounced off the September lows, but we are still not on any sort of bullish territory. There's a little, if you look on the daily here, and we kind of do a little zoom, you see the well, they're not moving averages, but you see the Ichimoku lines kind of banding together. It's basically just indicating a consolidation. Now, this right here is a potential spike down. But basically, if you're looking to go long, if you're looking to try to catch this as a bottom, what happened on Thursday, again, has to be your stop. You have to look at this bar, this shakeout on the CPI print as your risk level. The same thing applies on the S&P 500. It's right there at that 50% level of the COVID low to the all-time high, and it has spiked down, taken out some stops, made people think it was going bearish, and then closed back above inside the range. Setup that has worked time and time again. Is it 100%? No, nothing is. But this lets you define the risk by giving yourself a little buffer below the Thursday low. So what about Ethereum? Ethereum, same thing. You also had a spike. Everything spiked. And everything tells you where the range is. So if you are long, if you are looking to get long, your risk level should be exactly the same. This was, in all intents and purposes, a way to try to get people stopped out, try to get people out of their long position only to close back above it. It's a psychological trick that the market likes to do. If it actually follows through and gets back down to that level, that is the continuation. There was a great, if you look back at these kind of spikes, back in December of 21, when we had this. What was this? This was a jobs report. This was the December jobs report in December of 21. This is where I was trying to raise the alarm to everyone that basically on Ethereum, we're just looking at Ethereum now, but with Bitcoin Ethereum, you had this spike down on the daily. Let's just zoom into that. So jobs report comes out. Jobs report comes out from the U.S. and the jobs report is good. And what the Fed has been saying is that they are going to raise interest rates as long as unemployment is low. And that, for whoever was smart enough to interpret it, I'm not saying that I interpreted it that way, but who interpreted it as, okay, they're going to turn the printers off and all of this rampant speculation, the kind of stuff that Ken Griffith was talking about. Yeah, in this article that I was reading today about how meme stocks and crypto and everything bleeding off is good because it was just rampant speculation based on the money printer going burr. That was really, well, the beginning of the end was really where it failed to make a higher high. That's when I started making posts about, guys, watch out. But really in December on that jobs report was where we had that evidence that the Fed was going to start raising interest rates. That means that all this low interest rate, cheap credit that was making its way into NFTs, crypto, meme stocks, tech stocks, just everything was going to start coming to an end. Basically, the musical chairs, the music was about to get turned off. And what that did on the daily time frame of Ethereum and lots of other things is it set up this bar right here. Now, if Ethereum was going to go up to whatever people thought it was going to go up to, it had to hold this fake out. Okay? It's either a fake out or what's the opposite of a fake out? A real out? Either way, this would have definitely pissed some people off that had their longs right here because it would have stopped them out. But doesn't mean it's always wrong to get stopped out. In fact, the people that got stopped out up there were probably a lot better than the people that kept on holding, especially if they kept on holding beyond this spike right here. Because basically when this low were to get broken, if this low were to get broken, you get a couple of things happening. Number one, you have a follow through of that news report. And I remember this week section right here talking to people. There was everybody needed, I wish I could have passed out paddles to get over that river in Egypt, the Nile, because everyone was just looking at this as, oh, this is a stutter step. Oh, the interest rates aren't going to matter. Namaste. Tried to point out to people that this not only technically was a sign, but also fundamentally what was driving all this stuff up was interest rates. And the market was telling you that as the money printer was getting turned off, so was this era of crypto bullishness. Anyway, two things would happen if you broke this low. Number one, price is going to be on the bottom side of the cloud, the simplest of technical indicators using Ichimoku. And the second part is momentum is also going to be on the other side of the cloud. Those two things are going to happen. But really that spike, man, that's the reason I identify these spikes, the reason I trade based on them is because of how many times a signal like this would happen on a chart and take my money in a stop out. It happened so many times, I began to finally make the correlation that something happening a lot is repeatable. And so if you just reverse it and you say, okay, well, as long as you hold that spike, it is a sign of reversal. But once it breaks it, you need to be out. The same rules for a breakout. And so if you were to get price below 34.24 on Ethereum, you're going to get momentum on the daily out, price on the daily out, and you're going to break that spike. And go through my YouTube catalog. I've got one where I did a deep dive. Let me look at it real quick. Hang on. I don't know if it's on TradingView or not because I had to sit down and do some research. But let's see. Ichimoku. This was for a debate that I had about, one second here. This is I called it the best Ichimoku numbers for Bitcoin. There's thousands of Twitter people out there that are talking about the better crypto uh, Ichimoku numbers, but the reality is, I think. Let me go to the end result. Where was that? Yeah, the reality was using the legacy Ichimoku numbers, actually using it as a breakout strategy. In other words, looking for price to be above the cloud with momentum out at the same time, going back all the way to 2012, a decade of Bitcoin history, using the legacy Ichimoku to measure Bitcoin breakouts and trends, outperformed the crypto method and even buy and hold. If you got in when price cleared the cloud with momentum out, and you got out when it cleared the cloud with momentum out, even though you would whipsaw a little bit, you would still worked out better. So it's been a very, very good measurement on the daily of everything. Does it work 100% of the time? Nothing does. But it's simple, and it's been very effective. So again, we go forward, we'll see what day was it when you finally had a proper break. Okay, so really it was January 6th of 2022. There we go. Okay. So January 6th of 2022, down it goes and takes out the low of that December 3rd. Yeah, it was December 3rd. I don't know why it's showing December 4th here because that's Saturday, but it was a Trading View crashed again. Okay, I'm definitely going to have to use OPS next week, Jen. All right. So to finish up, down it goes and just getting out on January the 6th. Even though you had a little test, retest back here at 3,400, you'd still be out of it before you had this mess down here. Okay. All right. So that's that. And TradingView keeps crashing on me. Okay. Jen, I think we're going to have to do some work next week to get it working right. All right. How about YouTube? How about guys on YouTube? Are you still getting me over there? Let's see. Yeah, as soon as that thing crashes, everything drops out. Yeah, whenever it glitches on TradingView, yeah, people get Okay. All right. This has been my last live stream doing it the old way. It's time to make a change for sure. I was trying to work on it today, and it did not get fixed, so we'll have to do that. All right. Well, I'm going to wrap things up with a couple of things. So silver, because I know you like for me to look at that for you. Do you remember, Josh, when we were looking at silver? I think you posted something in the Telegram. And I think you posted something about how you had like a 9% day on silver, and every time that has happened, that led to a giant rally. Confirmation bias from a technical level. I've been talking about this for weeks. Yeah. YouTube all good? Okay, cool. I think you're a little delayed though, because I was just talking about you. Let me know. Write something when you heard me say your name first. All right, we'll see what that delay is. So I'll get to you on that. Yeah, because whenever TradingView drops, I notice the sound gets completely out of sync, and it actually becomes worthless for me to try to do some clipping unless I do some sound editing. But we're gonna fix that next week, one way or another. Even if one group of people can't see my bearded face. So just to continue, I think I'm still waiting for him to come back. Silver to the moon. Okay, so all right, you're delayed by about 2 minutes now. But I'll respond if you say something. So, yeah, when you posted that, and then this last week when it happened, I noted that you have this trend that started the COVID low to the all-time high. That level at 21, let's call it, was key. That is a key level. And when price first got to it here, it held it initially, but once it broke down below it, that was a breakout to go short. And it's been slow because it's precious metal. It doesn't moon except in the case of, I guess, well, there what it did. But it's going to be probably a slow grind down. And when you had that big up move and you had all those articles about now's the time to buy, that was actually coming up to a very key resistance level. See how it just pinged it right there? So, yeah. And now, probably as you go into next week, you're approaching these lows right here, this range. It could very well break below it. So, don't wish it for you. I know you love your silver, but I'm just telling you what I see. Just telling you what I see on that. Is gold still holding up? Gold is still actually holding still. It pinged a few weeks ago this level. Yeah, borrowed conviction. When you read stuff about how your favorite instrument is going to be awesome and amazing and go up, you got to do your own research. Otherwise, it's just borrowed conviction. Oil. Someone brought up to me today something very interesting. I want to double check on this. So somebody said to me today that oil is now lower than it was at the start of the Ukraine invasion. So when was the Ukraine invasion? Ukraine invasion on February the 24th of this year. Okay, so February the 24th is here. Oh yeah, we had that spike. And so oil closed on that spike at 92.68. That's actually a very interesting support and resistance if you look at it. A little late here. That's where it pegged on Friday of last week. But yeah, we're actually lower. Energy prices are actually lower. Hold on, let me make this. All right, so natural gas. What about natural gas? 24th. Maybe not natural gas. Yeah, natural gas is higher. Natural gas is still higher. So a little bit, not entirely consistent, but oil prices are definitely lower than they were at the invasion. So a little interesting factoid there. My favorite, Monero, keeps holding just like all crypto. It did a little spike on that day. Did not break the lows. My gut is telling me going into next week, my gut is telling me that since we don't have any news and since we've been in consolidation, we're just probably going to get a nice grind, nice bearish grind going next week. But I don't know. There may be some opportunity. Oh, dollar. Dollar is not recapturing the high yet, but remember, when I'm looking for a reversal, I'm looking for Tinkins and Turn, which basically is, this is basically a part of Ichimoku that I use on its most simple level to measure these short-term type of retracements. And what this is basically showing, is what I probably drew last week, is from the high, the all-time, it's not all-time high, a 20-year high that the DXY made versus the low that it made at the beginning of October. There was your defining line at 112.41. Broke above it, came back down on Thursday of this week to hold it, and now you're going to come back and you're going to try to retest that high. Now, if it breaks it, then it's going to go higher. But basically now, if you were looking for like some kind of a short-term setup, the highest probability is to try to take it for a few points up to that high. Interesting thing happened today also on, the ES that I was looking at. So if you go and you look at basically from Thursday's price action up till here, I just deleted all my drawings. Oh well. We were sitting in here right after the open at 10. And if you get into a situation like this where it was trying to go up and failed, and it's failing, we don't know, but you can really, really, really see where price is going to go. We're sitting here at 10.25. Now, if you want to take a scalp, then where's your best way to do it? Where is price being gravitationally pulled towards? That 50% of 36.18. Now, this is not the way that I like to trade. I like to trade with a high reward, low risk. But if you were to say, I just want a 1-to-1 bet, like, Wes, I don't need to make a lot. I just want it to have a really high probability. I hate losers. So taking a 1-to-1 trade, like something like this, to try to get it down, and you had a couple of spikes up to get it as well once it became apparent. Boom. It's going to be gravitationally pulled, even though it's volatile, it's eventually going to get pulled down to that 50%. And basically by the end of the day, that's where it's going to bounce around and close below. So basically it gave up 50% of this whole CPI volatility. A lot of people ask, why did this happen? Well, you're in a bear market, and in a bear market, there's just more volatility overall. And so with more volatility, those swings are going to be amplified. It's like you turned up the amplitude on the radio wave, because price moves in sine waves, just like electromagnetic waves go. So that's why you have such the big move from the mean. But really and truly, where are we? We basically closed very close to the middle of the range from all this week. So nothing really changed. There were just some good tradable opportunities in there. That's for sure. So hope you caught some. All right. I'm going to close it out and do a little bit of research, I promise, this week on some technical things so that we don't have any more interruptions and the sound and video continues uninterrupted. Thanks for joining me this week. Trade wisely. We'll see you next time.